That's the key takeaway. Well, let's welcome on board our guests as well. We have Rahul Shah to talk to us about the fundamentals of the market. And as usual, Kunal Bothra as well as Naresh Mirani joining us on the technicals. Kunal, let me first come to you because that's quite a bit of slide that we are seeing. And we should pull up the candlestick chart and that will tell you that whether we are seeing a lot of red bars or not. But what's your sense, Kunal, of where we are headed?
So, good afternoon, Nisha. My sense is that we are still heading on to the upward side for the index, specifically for the benchmark Nifty. Now, what we are seeing over the last couple of days is a definite amount of churn, which has happened from one sector to the others. For example, there is a definite amount of trend that the banking index, and especially the private sector banking names, are the ones which are seeing some sort of selling or profit booking, or what you may want to. But on the other hand, there are other sectors which are garnering a lot of attention from the markets. For example, we were discussing extensively in the morning about the pharma stocks. Most of the pharma names, especially the large cap names like Sun Pharma, Dr. Reddy, etc. These stocks are coming back to their 2-week, 3-week, or in some cases a multi-month high for themselves. So I would probably sense that this is a phase of the markets where the action is shifting towards stock-specific or rather sector-specific churns rather than the indices. We are still into a trading range on the upside, bias on the upside for the index until the time we trade about the 18,400 mark on the Nifty. I think it always makes sense to hold on to the index long positions, but not to add them because of the lack of momentum on the indices.
All right, let's also find out what Naresh's outlook is then. And Naresh, getting a sense as to how exactly you're building in positions at a time when we are looking at the index hovering around the 18,500 mark. The fact that a lot of those rate sensitives as well seem to be moving in tandem with the index. What's your outlook in terms of levels?
So if you look at it, the index has been sluggish purely for the fact that the heavyweights. So today we've not seen any follow-up buying in HDFC Bank or a Reliance Industries. We are seeing a little bit of a downtick in Infosys, TCS. So if say this comprises roughly around 35 to 40% of the index, and if there is no momentum here, it's tough for the benchmark indices to make a sharp move. The trends are clear. We are seeing stock-specific movements. So we are looking at, say, Hero MotoCorp breaking out multi-month highs, making a 3% move. Apollo Hospitals, which was lagging behind, making a 3-4% move. So the case is very simple. The trend is up. The momentum is not great purely because of the heavyweights not doing anything. But overall, the mid-cap indices continue to be in positive today. The small-cap indices in positive. The mid-cap indices have hit a new all-time high today as well. So the trend is still up, but the momentum is not great in the indices purely because the heavyweights are not doing it. And if we start seeing some bit of a reversal signal in any of the heavyweights, so we'll expect a bigger move, quicker move towards 18,800, 900.
Before I come to Rahul, I just have a follow-up for Kunal as well. Kunal, we saw that Zomato was consolidating for the longest time and then it went into a consistent uptrend. It's doing well today as well, just around that 70 mark, though off the highest point of the trading session. Do you think that time has come for Nykaa now that the consolidation is over? Because today it's moving on heavy volumes. The stock is up around 7%. Would you be a buyer in Nykaa now?
Well, absolutely, yes, Anisha. And I think it's a very good move for Nykaa because it's not just about the 7% up move for the stock. You look at the volumes today for the stock, I think it's at a multi-day high volume so far for Nykaa. If I'm not wrong, I think we can compare this volume to the start of the month of May for the stock when it moved up almost 10% or 15% in a matter of single trading session. And the second, the most important part is that the stock is now able to surpass the previous 2-month, 2.5-odd-month swing high. When you see such kind of price volume breakouts, it generally gives a sense that the trends have reversed for the stock price, and the kind of selling or the sell on rallies kind of a trend, those have changed for Nykaa. So this could be a refreshing change for the stock price. And I would believe that the stock should see a follow through up move. So like what we've been discussing earlier, the likes of PB Fintech, Paytm, etc., where there has been more consistent buying, I believe that there should be more follow-up buying for Nykaa after such a kind of a strong candlestick up move.
Rahul Shah as well is with us on the show. Hi Rahul, good afternoon. What's your assessment of the market mood at the current juncture, given the fact that, you've got some of those IT stocks that are bucking the trend, you've got a lot of those new age tech companies that are managing to fly high. What's the outlook given that we're holding out around the 18,500 mark? Do you think that we will see the broader markets this time take leadership?
Hi, good afternoon. I think where the markets have been, I think it's been very good at what I perceive out of it. I think Q4 earnings has been robust and blockbuster, I should say. I think it's better than what we were expecting. And last 4 quarters of earnings, what we see in this quarter, I think it has been a very robust quarter for most of the companies, what they reported their numbers. And I think this is what we are seeing, the follow-up buying coming into the markets, and which is reflecting. So to start with, I think, as you mentioned, I think a few IT companies are doing very well, and a mixed bag for some other. And so what I perceive is, I think the broader market looks quite interesting. Now the follow-up should move to the broader markets, which was polarized to a few large caps. So I think we've been seeing in that mid-cap index hitting highs. So I think it should be an all-round participation, what it looks like as of now. Maybe earlier it was only sector specific, which we saw that banking taking the lead and then followed up by the other sectors. So I feel that market should get into back with the broader perspective rather than only on a few stocks.
Let me get stock specific a bit. Aman was just highlighting the IT stocks, and interestingly, it's Cyient, which is up a good 7-8% yet again today. The stock has seen a great rally of late. You also have KPIT Tech, which is sitting at all-time high level. Persistent, of course, is up, 60-70% this year itself. Do you think this big divergence that we are seeing in large cap IT versus mid cap IT is likely to stay? And can it really continue for mid caps? Would you be still a buyer on the mid cap IT?
I think what we have seen is in the technology had a mixed numbers. I think few large cap reported the below estimates, and the mid caps performed very well. So I perceive that I think the numbers should what we've seen in the mid cap stocks in the IT run up, I think it should follow up in the large cap at this juncture. So my sense is that I think large cap should take it over from here in the IT space.
So that's the take coming in. Since we're talking about Cyient, let me just get a technical view as well. Naresh, on Cyient, look at this rally to book profits or maybe further add on to your positions?
So definitely not an add-on to the position. One can be looking at either trailing with a stop loss below 1300 or looking to book profits. The stock has made a solid move, one of the few names which is making new all-time highs. It just made a fresh all-time high about 1300, which was the high in 2021. So out here, one strategy is simply put, reduce partial profits at current levels or keep a stop loss at 1300. Until the time it continues to make higher tops and higher bottoms, right onto it. So overall, cannot be bought fresh here because the risk rewards are not great.
Okay, meantime, Rahul, wanted to get in your take as to what the outlook is when it comes to Biocon. Clearly, the stock continues to remain nervous ahead of the fact that you've got some of those global peers who are ramping up their plans to launch that anti-inflammatory drug at lower prices. Do you believe that the reaction that we're seeing is justified, and how much of a concern is this for Biocon?
I think what we've seen is whenever there's a new launch or something, you would see some kind of reaction immediate on the stock. So I think that's what has happened in Biocons. I don't see anything immediate major which is going to happen in this thing. So I think stock is fairly valued at this price and has done nothing in last 2 years if you look at it. So I think everything is priced in at this price. I don't see any major correction in the stock.
Correction on Biocon, most of the positives and negatives have played out, but let's look at some of the price volume buzzers as well if we can. Mahanagar Gas is one stock that continues a bit of a slide. It snapped the 8-session gaining streak.
Hello.
Rahul, yes, we'll come to you. Let me just highlight some of the volume buzzers in the meantime. The breakdown from upward sloping support is something that we are watching out for when it comes to Mahanagar Gas. Separately, Apollo Hospitals is one stock which has been doing really well this week. In fact, it's hit a fresh 52-week high today. It's seeing a breakout from the cup and handle chart pattern, and the volumes continue to be on the higher side. You also have Cyient, which has managed to hit an all-time high on an intraday basis, formed higher highs and higher lows for third session. I'm not sure if we can go to Rahul on Apollo Hospital because we've already got view from Naresh. He still remains a bit of a buyer on Apollo Hospital, if I remember it right. Kunal, Naresh, either of you, do you have a view on Apollo Hospitals that you want to suggest? Naresh, yes, you have to unmute.
Yeah, I've been positive on Apollo Hospitals. Today is a breakout move. The stock has made a new 52-week high and still has a lot to catch up with the rest of the hospital names. So if you pick up any of the hospital names, whether it is a Narayan Udale or a Healthcare Global or other recently listed names also, they've all gone into 52-week highs, all-time highs, and have made another 20% move from that points also. So that is where there is a lot of catch up left with Apollo Hospitals. So I expect a slow and steady move towards 5,500 to 6,000 here. And now one can keep a revised stop loss at 4,700.
Okay, so 5,500 on Apollo Hospitals. That's what the chart check is telling Naresh at this point of time. Quite a bit of up move left. In fact, since we're talking about the pharma space, let's also highlight Mankind Pharma. After the IPO, that stock had seen a bit of a drubbing, but now today it's up around 5%. And then you have a lot of cement names which are doing well. Nuvoco Vista is up around 5%. Star Cement is higher by 5%. India Cements as well at the start of the trading session at least was doing quite well. Kunal, what's your take on these cement names? Would you look at the charts of any of that positively?
I think except for Ambuja Cements, there is hardly any major chart which is actually showing any kind of a positive in momentum. For whether it's the large caps or the mid cap names. So I was actually looking at the charts for India Cement in the morning. The stock opened with a mild bit of a gap up, but then that got sold into quite easily. Ultratech Cement has been struggling to break past consistently above the 8,000, 8,200 band. The stock has seen a lot of volatility. Ambuja Cement is the only stock which I think has been a lot more consistent even after the sharp selling the stock had seen in the month of January. So that's the only chart which, as of now, looks attractive. Most of the other names, Ramco Cement, for example, that stock has run up exceedingly, thick and fast. And I think entering now at current levels would be a bit of a low risk reward trade because to try and look out for maybe a 5 to 10% swing upside for the stock, the potential downside could also be more than 5 to 10%. So I think it also makes sense to stick with just few names over here. Ambuja Cement is the only stock which looks attractive, so we'll stick to that.
Well, Nifty is just holding around that 18,500 mark, but as we pointed out at the start of the at the start of this show itself, that the metal is the space to watch out for. China is mulling a support package to help the property sector there, and that should augur well for the entire metal space, entire commodities basket, given the fact that this would mean that there will be more demand coming in for all the commodity as well as metals, and that's the reason the Nifty metal is sitting at the highest point of the trading session, 1.25% higher. Let's pull up some of the individual names as well and see which are the stocks which are actually reacting positively, whether it's some of the steel stocks, the likes of Tata Steel, whether it's Hindalco, whether it's Nalco, which are the stocks which are carrying the maximum momentum on the upside, and that will tell you that what's happening in the entire metal basket at this point of time. Rahul, what's your thesis around the entire metal cycle? It's very difficult to call the tops and the bottoms on this one. As an investor, what would be your recommendation?
I think if you look at the numbers of Q4, I think most of the metal companies declined and most of their numbers were below estimate year on year and as well as quarter on quarter. But what it looks like is, I think, way the government spend is there on the infra front. I feel that I think should be done, and I think all the metal companies, especially steel, should come back positively. That is what I believe. So I think steel stocks should gather the momentum. I think they have been beaten down more. I think, as I rightly pointed out in terms of this thing, and I think the things demand keeps coming up and infra spends keeps coming up. And what we are seeing is the blockbuster numbers from the real estate side and then the thrust of spending on infra play. I feel that steel companies should do well. So I think obviously likes of Tata Steel and JSW Steel should bottom out. And I think their stock has done nothing in last 1 year if you look at it. So I think looks interesting from the current perspective.
Pretty much across the board today, as we're flagging off, Hindalco 3.5%, Jindal Steel 3% on that counter, JSW Steel as well having spiked up along with Moil and MDC. They're all abuzz. In fact, let's get in a take on the charts then, Kunal. What's looking good within the metals basket, and do you believe that this rally is looking long-term in nature?
Well, as of now, of course, it's not looking long term, Avan, but at least this rally probably puts in place a short term bottom for most of the stocks. You look at the last 2 weeks of chart patterns, and there's so much of volatility which has come back into the metal counters, whether it's JSPL, a stock which has corrected, I think, more than 15% in the last 1 or 2 weeks. Hindalco has gone through a correction. Vedanta has been on and off in terms of the price trends. JSW Steel, I remember, I think the stock from 740-45 levels had corrected to a 680-685, and now it's in a bounce back about that 700 mark. So that choppiness, at least, that should be put aside for the metal counters after this kind of a rally. So what we're seeing now is more of a base building process for these stocks, they would gradually go into a zone where the news flow, the data points are, etc., would start to come out positive, and the trends would be far more stable and stronger for these metal names. Now, out of the pack, the two stocks which I would be keenly watching out for, and especially looking to go for a buy, one would be JSW Steel. I strongly believe that the stock could probably come back towards that 740, 750 mark once this rally recovery goes into the second stage for itself. And JSPL could be more of a high beta bet. So we'll be using some sort of options as an instrument. I think traders could look at a buy on JSPL as well.
Thanks, Kunal. Those are the topics coming in from the metal space. But watch out for tech.